All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
Whatever you do, you just need to be the best at it. If you're the best at what you do, like, there's always going to be a role for you. But middle 80%, it's going to be tough.
Advice to live
Wise
by.
words.
If you're going to do something, you just got to be the absolute best.
Be the best.
Seriously.
Vance, I heard you're horrible at skiing, though, so what's the deal with that?
Bro, I'm nasty. Come with me. Seriously. Fuck around and find out.
All right, everyone. Welcome back to the first Bell Curve Roundup of the year. I know you all missed us. I know I missed these guys. Very excited to be back. So today we're talking about Solana. Is Solana dead? Is Bonk the new big thing? Is Bonk the new meme coin of crypto? We're talking about Cosmos and the USDC. We're talking about Winklevoss twins' open letter to Barry. We're talking about Silvergate being down 50%. So I think let's start on the Solana stuff. Mike, where do you want to begin with here?
Well, maybe we can frame this in something of debate, just because I guess the big story about Solana is just the price action's been absolutely horrendous. Vance, I think the tweet thread that you put out a little while ago about basically Solana and all the Sam coins getting punished because they were selling Bitcoin and ETH deposits, and they were kind of artificially pumping, the price of L1, like at least the Solana sort of ecosystem. And I think that is basically being unwound. So, a little while ago, Solana, it was hovering around $13, and then it dipped to like $8.50, I think, at the absolute low. There was definitely a time when I was thinking in my head, what if it actually hits $3 and Coin Mamba is actually vindicated against SBF? I thought that might actually be a possibility. I think since then the price has largely recovered, and it's trading right about range bound to where it was, like 12 or $13. There's been a small and needed win, I would say, for that ecosystem in the form of Bonk. Bonk, as far as I can tell, I'm a supporter of the Solana ecosystem, but it seems like it's a meme coin that got airdropped, and it's done like a 35x or something like that in the past week. I'm not sure how much like long-term viability or what that project really stands for, but I think it's a small and probably necessary win in the depths of a pretty deep bear market. Maybe we can start. I don't know if you guys have any specific takes on Bonk in general, or if you just what are your thoughts on the future of Solana in general? I guess as an L1.
I don't think Solana's dead necessarily. I mean, these things only die if the developers leave, and you don't actually need that many developers to keep an L1 together through a bear market. Like ETH actual application developers through the last bear market, Michael, how many? Like counting the core DeFi people.
I mean, in the thousands. It's
probably,
not
yeah, probably. Like I think the people that people really know are the application developers, and in ETH last bear market there was probably hundreds. There was probably thousands of core developers, infrastructure tooling, people like that. And so it's not unthinkable that Solana comes back. I think what you're seeing is it's just re-rating to a lot of the existing L2s and L1s that are out there. So Solana is still $7.5 billion. It's getting closer to something like Optimism, which is $4.5 billion, and is doing 42% of the transactions of Ethereum. Atom is, I think, $3 billion. They're starting to be just this re-rating. And it still seems like there's more, things that it has to work through. There's overhang that Alameda has. There's overhang that a lot of investors have. But it's either going to make it or it's not. But most chains don't actually have this dumpster fire of a circus that goes on that can define it in the crucibles of a really tough bear market. So if it does survive, I think it'll do pretty well. But if it doesn't, it wouldn't surprise me either.
The way I'd think about it is sort of what's the narrative of Solana now? I think historically over the last year and a half, you would kind of point to Solana DeFi, and Solana DeFi being enabled largely through institutions like FTX, market makers like Alameda, and just activity and capital that both of those and many others kind of represented jumping into the ecosystem and supporting these assets. And so what you're going to go through now is basically, to Vance's point, a re-rating, but also just a new narrative void that you have to go off and solve eventually. And, maybe it's consumer applications, maybe it's, PFP NFTs, maybe it's, things like Bonk. Maybe it's games. And, Solana, at least last I heard, they had something like 25 games launching in Q1. So I agree with the take that they're not dead. Largely, it's developer ecosystem, but it's also just general excitement and activity that builds momentum. And I don't think momentum has stopped or gone away. I think really kind of what's happening right now is it's the nuclear fallout of what just happened over the last 2 months. And I think that there will be some application category that Solana is well suited for. But you got overhangs of vesting schedules, you've got overhangs of price falling. I think a lot of what that last couple of weeks in the year price action was, and you saw this across a number of assets, not just Solana. I think a lot of that honestly was tax loss selling. Because as soon as the year was done, you saw everything, a lot of these illiquid or other assets pop, 20, 30, 40%. And so I think you're going to start to see the building of the base for Solana. And I don't really have any takes on Bonk specifically. I know that there's sort of like a one pager. There isn't a white paper. Nobody really knows like what it is or how it's going to work or what it's going to do. But the one thing that I will say is positive, at least for the trajectory of Solana, is speculation seems to be back. And there's excitement, there's energy, even if it is around something that's supposed to be a Shiba, knockoff, Doge knockoff. Just the fact that there is something happening like that, I think shows that there at least is some activity going on.
Do you guys think that, because there are kind of like the big difference in terms of scaling trajectories that somewhere like ETH has taken, which is like modular versus Solana's being monolithic. Do you think there's no like steel main case for a monolithic blockchain like Solana attracting a bunch of market share and activity?
There probably was more of a case in a world where 4844 EIP 4844 didn't exist, but we now have such an excess of block space, of cheap block space, and it's only going to get 10 to 100 times cheaper, that I don't think the same monolithic argument stands up as to when, ETH fees were like $300 to use a transaction. So I also think it's not necessarily about the characteristics of the blockchain itself. It's mostly about who sticks around. Like you had like the DeFi people, you had like a lot of ideologues in the last ETH bear market working on, private preserving technologies, DeFi, games, like random stuff. I think the question is who sticks around on Solana and like what do they make the new culture of the chain? Like the Jito guys are really talented. We're an investor there. DFlow certainly has aspects of Solana in its stack. But then you kind of have Steppen, Orca, and a long list of honestly like SAM projects. And I think it's going to be interesting to see who emerges from that list. Because that's going to be what the chain's new narrative is, to Michael's point.
Yeah. Very fair. I think Orca, for what it's worth, is a pretty high quality project. But point taken, 100%. I like so much of this is actually like there's a big like kind of a technical argument, but then there's a lot of this which is like a BD and winning hearts and minds argument. So I think this is like the crucible, and they'll emerge from this or not. I'm totally in that camp as well.
Yeah, like on the same token, like people that are in the Atom ecosystem believe in self-sovereign chains. And like you can tell when you talk to them, like that's a philosophical point that they're willing to, die on the hill for. I don't know if people are willing to die on the hill of like monolithic blockchains in general. So the chain probably has to stand for something other than that. So that's what I would say.
Why don't we move on to, let's talk about the open letter that the Gemini that Cameron Winklevoss wrote to Barry Silbert. So basically, Cameron published an open letter on Twitter. And, we can go through kind of the cliff notes of what it is and why that's important as a reminder to the audience. So Gemini had an earn program where you could basically deposit coins, and then the users of the Gemini earn program would earn some sort of yield on that. What was happening on the back end is all of that yield, all those coins were basically being rerouted to Genesis, and then those were going to, Genesis's customers, right? And they were supposed to be earning more yield. So Genesis has obviously they've closed their withdrawal window for a long time now. And Cameron Winklevoss published an open letter to Barry Silbert saying, hey, we've basically, alleging that, hey, we've been trying to get in touch with your team. We've been acting in good faith. We've put forward several proposals, one proposal, and then we iterated on it, and we just haven't heard anything from you. So basically, he was alleging that Barry's acting in bad faith and stalling for time. There's also something kind of interesting. He called out DCG owing Genesis $1.675 billion. That's about 5 times the 500 some odd million that he was that it was public that Genesis owed to or DCG owed Genesis before. So what do you guys think about this whole? I mean, is this, let's set some context here. Is this like an important development? I mean, do you guys have any takes on this whole situation that's unfolding?
So I think the TLDR, right, is so just to make sure I understand it, Genesis owes $900 million to Gemini earn customers. Cameron is claiming Barry is refusing to meet and find solutions. DCG used those funds from Gemini earn to speculate on risky trades, probably like the venture side of their business. And it seems like the date is January 8th that they need to find a solution by. Do you guys understand it the same way? Is that right?
Yeah, I think January 8th is the date. And reading the tea leaves of this isn't in the letter, that they will, are threatening to put Barry into a notice of formal default, which would theoretically push him into bankruptcy. It all depends on the terms of service in terms of who actually owns the assets. But I do think that if you have a loan agreement that, has this provision in it, you can push someone into bankruptcy if they cannot pay you back.
The one part that I kind of think is potentially a stretch, and if this is the case, it would be pretty bad. Genesis taking assets from Gemini customers and using them at the DCG level would be something akin to the rerouting of entity structures that we saw with the SPF and Alameda and FTX fiasco. There are certain separations of concerns for each of these different entities. And if you're lending customer assets, retail customer assets for an earn program that then go into, let's say, the DCG venture portfolio, that's not good, and wouldn't be able to happen independent of terms and conditions. So I don't know if that's actually true. I would hope that is not, just for the sake of everybody involved here. But it is clear that Genesis was at least lending out these assets, as they would with any other assets that were being put onto the Genesis platform and earning that yield for doing so. So whether or not this gets solved by the 8th, I don't think it is. They basically, DCG came back over Twitter and said, give us more time. This is really complicated to figure out. Like, we're working hard to figure it out. But yeah, where this nets out, the longer this goes on, I think the harder and harder it's going to get, because there's going to be more and more people that are involved and frustrated and want to, come back and get their assets. And it's just going to get heavier and heavier for them to handle over time. So I would hope that there's quick resolution, but I'm definitely not holding my breath.
Let me take the other side, not the other side of this, but like there is another angle here, which is the other reason Cameron's doing this is to like get everyone on Gemini's side here, but also Gemini offered this magical 7.4% return, which was a very unrealistic return. They did so by lending $900 million. If you look at their website on how they did that, they're like, we do a bunch of due diligence into all of our counterparties. They only had one counterparty. It was Genesis. They just basically funneled money into Genesis. So like, I know that Cameron he's trying to win hearts and minds by being like, the money of school teachers is being stolen, as if like Gemini is not the reason that the money was loaned. But like, the end of the day, that was your product, and like I think they are at fault as well a little bit here too. So I'll take that.
Very much so. Like
100%.
Their spot exchange did $11 million of volume yesterday. Like, it's not like they have like this whole other business that they need to be paying attention to and are like making moves because it's super successful. Like, they were primarily in the business of lending money. And they did lend $900 million to Barry, and if that goes to zero, highly probable the equity value of Gemini is less than zero as well. And so, if you lend someone $900 million and they can't return it, that's your problem. And I think that is the part that I hope is not swept under the rug here, is that, yes, Barry was responsible for it, and he'll get in trouble for his own set of things. But on the other side, the Twins, they blew this up themselves. And so, yeah, I honestly thought the letter was like a little bit of a misdirection / pretty weak, to be honest.
Let me ask you guys something. What do you think the right move would have been here for the Twins? Because would you guys have like stepped up and tried to make customers whole? I mean, $900 million is a lot of money. I mean, what was the right thing for them to do in your perspective?
Not lend out this money, not start this business. Coinbase kind of got saved by the SEC because they put the kibosh on their lend program, or their earn program. But there is no person that has ever worked at any sort of financial firm that will tell you that lending 100% of your customer deposits to one person is okay. Even if it's a pass-through, your counterparty risk is on the Genesis level, not Genesis' counterparties, which turned out, I guess, to be also Barry, buying GBTC and venture stuff. And to Michael's point, looks very mechanically similar to FTX and SBF.
Did you guys read Sue's take on this?
I thought Sue's take was relatively correct. I mean, he's also the person who owes them $1 billion, but I don't see a logical flaw in his argument. I do see someone who has so much bias and should not be allowed a redemption arc, et cetera, but he's not wrong.
Well, the one point that I thought was not as accurate with Sue's take was, and I haven't read the Genesis terms and conditions, but I have read a number of the other centralized lending platforms' terms and conditions. FTX definitely was incorrect about its terms and conditions. Like that is one thing that is fundamentally different from any of the like Celsius, Voyager, basically all the others that, basically said as soon as you give us your assets, they are not your assets anymore. They are property of the company. And that's literally what happened in the case of, the ruling that happened yesterday. So I generally think like that's a major difference, and it may be minute in legalese, but there's a lot of lawyers and there's a lot of institutions that read those terms and conditions and put their assets on FTX because they thought, hey, this is how it'll work. This is what it is. Whereas that may not be the case with some of these other providers.
You know what I didn't know is that somehow I completely missed this, is that SBF was on the board of Genesis. Completely.
That's Genesis Digital Mining. Or sorry, that's a different company
okay.
entirely.
Why was Stu using that then in the...
Because Sue's just moving quickly and just trying to make an argument in his favor. But, a lot of it is not wrong. Doesn't remove the fact that they did bad things and they owe money, but
Just to double click into that point, I haven't dug in a ton, but I saw this morning, did you guys see the Singaporean government, I think, tried to serve Sue and Kyle via Twitter?
Via Twitter. Yeah.
I think they did. I think that served.
They did.
I think that is technically what happened. I don't know if there's a difference, but if you're going to hang out on Twitter and try to build a redemption arc, you might get served there too.
It's a new and exciting day. Pushing all kinds of frontiers in crypto.
If you were DCG, what would you do here? What's the get out of this?
The problem is you don't know what the actual hole is. Like, I'm sure they do. I'm just saying at this point we don't have perfect information to know when all of these maturities are happening. If go back to when FTX blew up and they're like, oh, $175 million is really the exposure here, and they filled that hole pretty quickly. And then it was like might be a little bit more than that. It's like, how far does this thread actually go if you pull on it the whole way? So I don't know all of the details, but I mean, if you need to fill a hole, you need to fill a hole. And they do have some significant assets in the form of Grayscale. They've got, a venture portfolio. There definitely is an opportunity to recoup value on a lot of those things. But, it's getting to the point where you put the entire DCG at risk because of something Genesis, at least originated. So you kind of have to think about, do you save the body by cutting off the arm?
Has Barry stated publicly what he took the loan from Genesis for?
Yeah. Share repurchases, and they also were public about buying, hundreds of millions of dollars of GBTC. There's a lot that's public. The missing link is whose money was it? And one of the all-time funniest things that SBF ever said was that dollars are generally fungible, so I don't really know which money was used to pay for what. And it's kind of like the same thing here, where it's like, yeah, ooh, that is your money, but that is my money, and like here's the blurry dividing line. I think it's going to end up they just need to make some sort of deal. Like DCG has leverage that if you try to put us into bankruptcy, we're just going to put Genesis, and you can fight over that carcass, which is not worth that much. And the Winklevosses have leverage because they have this like popular uprising of school teachers and the people that they highlighted in that letter. But like neither of them are in a great position because like they kind of have like this Mexican standoff thing going, and they need to come to some sort of agreement, which I think is part of what this is. This is like a pro forma, like we're going to argue on the internet to turn up the pressure on each other type of deal.
I don't think they need to come to an agreement though. It seems like like if I were, I don't really know about restructuring $1 billion deals here, but like, couldn't you just, Genesis is not really worth anything anymore in my mind. So couldn't you just let Genesis go into Chapter 11? Because then Gemini gets hit with all the retail lawsuits then. Like then all the school teachers are Gemini's problem, not Genesis's and Barry's problem.
But then that kind of calls into question all the different affiliated party transactions that happened over the last 2 years. And there's an argument as to like how far the look back window is, whether it's 2 years if there's illicit activity, or if it's 90 days, I think, or 6 months. Once again, also not an expert on $1 billion restructurings, but the loan for the share purchase buyback, that might be called into question at the DCG level. Like the intermingling of all of this is where I think you don't really have just like a clean break of like, okay, kill Genesis. I do think you're going to have to go through some form of restructuring, in the slightest. But yeah, I agree. At current stand, like Genesis is worth nothing.
It seems like there's only two options here in you either send Genesis into Chapter 11 or you have to raise funds at the DCG level, either by like selling equity or dissolving Grayscale and a sale of GBTC, something like that. It seems like those are the
that was the rumor in early December, right? They were doing some sort of capital raise, but at least so far that hasn't come to fruition.
Yeah.
Once something like this goes cold, like it's hard to reheat it up in terms of people interested in buying significant assets. So, the other thing which is kind of remarkable is if you look at the Genesis terms, I have them pulled up. It basically is very clear in if your deposits are lost or if there's an accident, with our counterparty, you take on all of that risk. Number one, I think terms like that should be outlawed because nobody reads the terms of service. They just assume that they're signing up for an account, which will theoretically give them their money back. But number two, like I wonder if there is a world where it's just like, sorry, the terms are what the terms are and the money's gone. I think that is probably, if you're discussing that, you're probably in some sort of court, which is probably not good for them, but it's certainly some sort of outcome that could happen where, kind of neither of them get in trouble, but the Gemini entity has claims against the Genesis entity.
I think it does come
vice versa.
I think it does come down to those related party transactions, because if you've done that within some sort of reasonable window, that pushes down the ring fence, right? And then suddenly like all of DCG is at risk. And when you're restructuring, I'm not a restructuring lawyer either, but like I kind of know in general you can kind of like push out, right, when you need to make your payments, right, to match up cash flows. That doesn't really work because there's no more cash coming in. You could convert some of that debt into equity. That's not going to work because there is no equity when it comes to Genesis. And then, it really depends on those related party transactions and what they use them for. Like if you put all those into like DCG venture investments, like that's a big problem. That's a massive problem.
You think Chamath is going to send back the $1 billion that he made and was paid out from all this?
Ooh.
Wow, I don't know.
That's a good point.
What's the worst case scenario here? What if there's just like, look, no agreement can be reached. We're going to have to fight this out in court. There are going to be mass liquidations of like whatever is left of Genesis' loan book. What is there a worst case scenario here, or like, is it kind of just some?
We're in the worst case scenario right now, which is that there's no resolution. I don't think first and foremost, when you're in this type of halt withdrawals perspective with a volatile asset like crypto, I think you get hedged pretty quick. So there's likely not going to be like mass selling due to forced liquidations, etc. But I do think that you're basically just seeing the worst case. So maybe other people who had assets on the platform until they get resolution are selling assets to cover, potential losses that they'd have other places. Maybe that's what's happening. But I don't know. It doesn't feel like there's going to be anything worse than where it currently stands, which is 100% of the assets are not available to customers.
Unlikely that the trust gets unwound in its entirety. There's also legal limits of what they can sell at market if that were to happen. I see the probable outcome as the twins probably file against Genesis to put them into bankruptcy. Just Genesis files. They can try to put DCG under, but really DCG needs to put DCG under if it's going to happen. But more likely they'll just put Genesis in. Then there will be a legal fight to unencumber the rest of DCG's assets into that bankrupt pool. But it just depends on what goes there and on what timeline. Barry is right that he's current on all of his loans. So, I think he's either biding for time or hoping that there's a pump in crypto, because keep in mind, they're long a ton of crypto assets. If crypto doubles, probably the hole is a lot smaller on the DCG side. So
it seems like he's stalling for time for exactly that, like pure speculation.
Waiting for the pump. Just to save you.
It
wouldn't be the first
Zcash
time.
buys.
He needs his own bonk coming.
Barry
bonk.
Dogcoin.
Yeah.
We're going to tokenize the debts in a Dogcoin.
Bull run in ETH Classic.
Successful
investment that he made.
If his portfolio wasn't such duds, I think there could be more of a reasonable solution. But who wants to buy Zen Cash and Ethereum Classic and the Ethereum Classic Grayscale Trust? There's only one market for that, and it's Barry.
Saw the discount on the ETH Trust hit negative 60%.
Seems like they're selling some ETH too.
Yeah.
The other thing we saw last night was, and we monitor all of those wallets. We saw small amounts of crypto moving from Genesis wallets, 0.037, very low dollar value. Those are what we do those for when we do them, or to prove that we own addresses. So there could be some sort of okay, that's mine, and these assets are mine, and some sort of resolution potentially.
Or the other reason you move small amounts of money, test transactions before the big one.
I'm
kidding.
Not in random 2-digit figures.
I'm kidding. Should we move on to Silvergate?
Oh, last one on the bankruptcy circuit. Looks like Binance got blocked from buying, or there was a limited objection filed. I don't think they will end up blocking them, but just interesting to see the SEC now really out there protecting.
Wait, blocked.
So
I missed this.
So,
Say it.
So I'll describe it. What they did is they filed a limited complaint against Binance US's acquisition of Voyager, suggesting that they don't have sufficient information as to where the source of funds was coming from. Basically, my read into this is that the SEC is asking for more information as to what are your business operations, how can you possibly be spending $1.02 billion on this acquisition, and where does the money come from, essentially. The thing that I read from this going in is that it's actually not a $1.02 billion purchase. They're basically just assuming 1.002 of the customer liabilities with the same amount of assets basically that they're acquiring from Voyager, and they're putting up $20 million of cash consideration. So I think this is more just semantics in terms of how you describe what the deal is and how it works. But it does showcase the fact that the SEC is very interested in learning as much as they possibly can find about Binance and how it works and where its money's come from. Interesting, but every single day, it seems like there's a new interesting twist in this, slew of bankruptcies that we're going through.
Gary Gensler actually did Brian Armstrong a pretty enormous service by blocking that earn for Coinbase.
It does depend on how they were planning on building the earn product. Obviously Gemini basically just sent all their money to Genesis, but if it was going to be that Coinbase, for instance, was doing the credit assessment and going to their existing customers and lending assets to them directly, and then they were also using that as assets in to be able to have the collateral to give to those customers, it is a different proposition slightly. But any sort of lending product over the last 18 months I think none of them are still survived.
They would still be
Basically.
They have the same client set though as Genesis. Like they probably
For
wouldn't have
sure.
gone down
Right.
as badly, but
Yeah.
like they're still lending to
What were the
same
other
clients.
options? You know, like
I mean,
Well, I don't think they
our-
would have lent to Alameda in the same way.
Yeah.
I don't think they would have
Yeah.
lent to Three Arrows in the same way. You know, I don't
Like,
know.
they are
When
the-
you're a public
they are
company, it
the
doesn't
ri-
really fly.
Right. They're the risk averse, centralized provider in crypto. And that served them well. Like they're the ones that are still standing, with all limbs intact. And so I think generally they would have done a better job. I just would assume that, but I agree, it still would have been a lending product.
All right, good. Let's move on to Silvergate and talk about what's happening there. So Silvergate, obviously, it's a public company and it's a bank that has access to like the Fed discount window and everything. Their stock opened. We're recording this on the 5th, so Thursday. It's down some 40 some odd percent today, and this was based on the back of a story from the Wall Street Journal that reported that customers withdrew about $8 billion from their accounts there. So Silvergate stock, it's trading at about $12.50 or whatever it is right now. That's down from all-time high of $222. So over the last year and a half or so, it's been about a 95% decrease. The total deposits from digital asset customers declined to $3.8 billion, which is down from $11.9 billion on September 30th of 2022. So basically within the last quarter, it processed about $8 billion worth of withdrawals. In order to satisfy the withdrawals, Silvergate liquidated debt that it was holding on its balance sheet. That resulted in a $718 million loss. And that's more profit than the bank has generated since 2013. So obviously investors didn't like that very much. Silvergate, in addition to being a bank, so they have a lot of deposits from crypto customers, actually about 90%. So Silvergate basically restructured. They kind of sold a lot of their core businesses and really pivoted to 100% focus on crypto. They have 90% of their deposits are related to digital asset type customers. So a lot of exposure there. Alan Lane has gone and said, the reason why, there were these withdrawals was not necessarily just like people moving from Silvergate. These were kind of like institutional crypto people. As I said, there's nothing happening in crypto, so we don't need to keep our money with you anymore. We want to put it with treasuries and things like that. But they, just to mechanically describe that $718 million loss, they were holding their customer deposits in like mortgage-backed securities and treasuries. So when interest rates were going up, the value of those, debt securities went down and they had to sell it, to cover withdrawals. So they got smacked with a huge loss. Which is tough. But they still live, they still live, and there's they kind of live to tell the tale. They also, sorry, I have these numbers here somewhere. They have more cash right now than, there's like $3.8 billion worth of customer deposits. They have, over that in just cash, in addition to their existing portfolio of debt. So it sounds like they're still solvent. They cut 40% of their headcount, which is, it's a lot. But what do you guys think about the whole Silvergate situation?
Going back to, the beginning of Silvergate was like a very small regional bank in San Diego and I remember listening to some discussion about them where it was like essentially a family-run bank, and they caught on to the crypto trend a few years ago, back when basically nobody else was willing to bank crypto startups. I think, Vance, correct me if I'm wrong, but Hashleets was a Silvergate customer in like 2017. And that was like the only bank that we could possibly get at the time, and we had a couple of accounts with them, and I don't think we have any existing accounts with them now, but generally like they were the original crypto bank, and so they caught all of this upswing and all of these assets because they were the ones who were willing to take on all this risk in a period of time when nobody else was willing to take on those customers. And it seems like, the same sort of affliction that hit all these other centralized custodians, centralized operators, has hit now a publicly traded bank. And they're still existing, they're still alive. The big knock that they had over the last couple of months is that they were the primary bank for Alameda and FTX. And so then there's questions of how how do they do sort of AML, KYC checks, and like all the different things that are required for, anti-money laundering, know your customer type rules and regulations, especially for banks, financial institutions. So there's a lot of consternation over the last couple of months. The reason why today is such a bad day from the stock isn't just in a Wall Street Journal article. It's they issued preliminary Q4 financials that are unaudited. Think about that. It's January 5th. It's basically 2 days into the trading days of 2023, and they're having to issue like emergency Q4 financials that ended 5 days ago. That exposed, the amount of withdrawals, that exposed the 40% reduction in headcount, and basically all the different losses and things that Mike, you just talked about. So I think it's going to be tough for them, and definitely a reputational hit. And when you're a bank, that is a lot of the value that you have. But yeah, they're still alive.
The other thing that's, Silvergate did that was, to my understanding, I wasn't really around then when they launched Silvergate Exchange Network, SEN, but that was a pretty foundational piece of infrastructure. So, crypto is obviously 24/7. Banks, there's just a limited window of time, right? It's like 9 to 5, I'm pretty sure, Eastern, that you can send wires. So, basically, if you want to partake in crypto markets outside of those hours, sometimes you have to like top up collateral, right? So you need to be able to send at any period of time. So Silvergate basically made this payment network between some of the major exchanges and big investors, and it was like, it's still a really necessary piece of infrastructure. So they did some stuff really right, I guess.
Well, isn't you guys need to help me understand this? What's their thing, that Send network or something? The network they created, isn't that how exchanges all move money between them? Like if I'm Bitstamp and I want to send money to Coinbase, you want to send it to Kraken, you don't wire it from Coinbase to Kraken, you send it on the Send network, right? Do I understand that correctly?
Right. Yep.
I think that's.
They also do loans as well.
It's basically. Yeah.
They have Send Leverage they launched in the last 6 or 9 months as well.
Because everyone needs some
leverage.
leverage. Got it.
The way I think about Sen is it's kind of like having, a checking and a savings account at the same bank. You can always make internal transfers because it's just like, an internal accounting technical change for them. And that's basically how they built Sen. All of these exchanges, all of these participants, ecosystem participants all had accounts at Silvergate. And when you would do that, they would just open up internal transfers between the different entities.
I'm looking into this too much, but I remember Warren calling out Silvergate a couple of weeks ago, or maybe it was I forget if it was in November or December. So Wire also went down this week, or they announced that so Wire is an on and off ramp company, more on the retail side of things, like MetaMask uses them and stuff like that. I think if I were sitting in the government shoes and I really wanted to go after crypto, you go after the on and off ramps. Not that Wire is shutting down because their acquisition with Bolt fell through, and I'm sure they just weren't making money and different reasons, but it's a bad trend, I would say, for these on and off ramps to keep getting hit hard. Because if I were going one step deeper, if I were a government going after Bitcoin and crypto, I would attack the on ramps.
I think it'll be damaging, right? If Silvergate ends up going down. For what it's worth, this isn't a form of due diligence, or it's not financial advice, but I've met Alan Lane. I think he's a pretty high integrity guy. I respect the bet that he took purely from a business standpoint on crypto. I mean, they are going through what many other very reputable brokerages and exchange have gone through. They processed all of these withdrawals. Their equity, their bank equity got a huge hit, but they're still standing. So I don't know. I mean, that's kind of what you have to do, right? I don't know how their reputation ends up coming through here, but you have very few options. And if you're we're crypto adjacent, right? We're media and information in crypto, but we don't really touch crypto rails from a Blockworks standpoint. And we bank with one of the big banks in the US. And Jason, I'd probably, once a week go on a rant about how much I hate our banking relationship and would do anything I can to get away from them as soon as there's a viable option. So I don't know. People have short memories. I don't think it's a death toll for Silvergate. I have another observation to make about this situation. I'm curious to get your guys' take. There was there were kind of, especially during the last bull market, there were these like public crypto stocks that acted as kind of proxies to get crypto exposure. So like Silvergate was in that basket, MicroStrategy was in that basket, Voyager when it was public was in that basket, Galaxy, Coinbase. And if you look at, not really Coinbase because they IPO'd like right at the top, but if you look at the performance of those stocks, they actually outperformed crypto in general. And now they're underperforming crypto. And a lot of people kind of fell, people that couldn't, they're like, this is probably something you guys have heard 100 times. I can't really wrap my head around Bitcoin. I can't value it, but I can invest in a miner because there's cash flows, or I can invest in a bank, or I can invest in Coinbase. And I've tried so many times to describe that is not how that necessarily works, right? Like it's not necessarily less volatile because it has cash flows because everything is really indexed to the same thing. But there was I think investing in those public market proxies, there was a hidden premium in that. It made it perform better during the bull market, and all these stocks are getting hit worse during the bear market because people wanted exposure, and there were so few vehicles that you could do that easily for public market investors that that was just a hidden premium in those stocks, and that's all getting extracted. Like Coinbase also is down 15% today as well, they
were up 15% yesterday. Like Coinbase has been pretty volatile over the last 6 months. I mean, I don't know if you guys remember this. I know Vance probably does, but remember the conversation of when Coinbase was going public, how everybody thought it was going to be like, $100 billion plus company because of the premium of the lack of really solid publicly traded companies that have index exposure to crypto. Like that was a lot of the selling point, of the IPO and, what the stock would represent afterwards. Sorry, I guess they did a direct listing, not an initial public offering, but the premium I think is really just a new form of beta. And, when crypto is down, when crypto's up, it'll be up higher. And when crypto is down, it'll be down lower. But it is, just more speculative. I think you're going to have to re-rate all of those because not many of them still last.
Do you guys buy publicly traded stocks, like publicly traded crypto stocks like Coinbase and Silvergate, or do you play in that game?
Not in the fund.
Yeah.
No, like personally.
I own 0 equities.
You have zero
equities.
You do too, Vance? You have 0 equities?
That's not true. Sorry, take that back. Zero crypto equities. If I'm gonna buy crypto, I'm gonna bet on what I think are the fastest horses, which are the actual crypto assets themselves. All of the public stocks that are crypto related have absolutely gotten smoked, if not bankrupt this year. Core Scientific just filed for bankruptcy, I think a week ago. That's the largest North American Bitcoin miner. None of these things, I think, express the true potential of crypto. And in a down market, none of the big hedge funds can actually short crypto. Where would you go and short crypto today? You can't trade through Genesis. You can't get accounts on Binance. Your only source of short exposure is potential spot. So most people are just going to short the names that are available on the Bloomberg terminal. And those are Coinbase, Silvergate, Core Scientific, all of the usual suspects. So I don't like the favorability there.
Random question, but Michael, do you buy stocks like tech stocks? Do you Shopify?
I own 0 equities.
Love that. Love that for you.
I do think that when crypto recovers, Coinbase will also recover. And Silvergate is a good exposure proxy to lending within crypto, which is basically at 0. And if it's going to come back, it'll be regulated. And so there are some favorable dynamics there, but everyone on Wall Street just hates crypto right now. I just saw Dan Loeb tweet out, "Hope is not a strategy," about David Marcus, who's building Lightning Network for Bitcoin. A year ago, Dan Loeb almost led and then subsequently pulled out of the BlockFi, I think Series G or whatever it was. He was going to put in hundreds of millions of dollars into BlockFi, and now won't even touch or speak positively about Lightning Network. The tide has just gone out on those stocks for the time being, just because of who has access to them and the incentive to short.
BlockFi there were a couple of just very pivotal moments where it all could have gone very differently for them. Not trying to defend that business model or anything, but there were.
Isn't the backstory that Dan Loeb pulled out of that deal because they fat fingered the customer deposit or the customer withdrawal thing? So he's He's like, that's so reckless. So he pulled out of the deal. He pulled out around the same time that the SEC slapped him with $100 million fine. So they thought they weren't going to have $100 million fine, and they were about to raise a huge round. A month later, get hit with $100 million in costs and can't raise a round. So
keep in mind, like Dan Loeb was all speaking all sorts of mumbo jumbo about like the promise of blockchains and the metaverse, and how like I think Chris Dixon was teaching him about NFTs. A lot of these people are just fair weather fans. Like when it's down, they're going to hate it. When it's up, they're going to love it, and they're going to time it completely wrong to get in the market. Like a lot of these people are the people who are buying the GBTC premium at 60% up. Bad.
Your uncle, Jason. This is talking about your uncle, man.
Yeah. Just put in your 401k.
Yeah.
My 401k is storage now.
Christ.
At least you didn't buy ETH. Well, it's pretty close now, I guess, but Jesus.
Yeah. Let's talk about USDC launching a consumer chain in Cosmos. So this was actually announced a little while ago, but in September, Circle announced that there was going to be native USDC that was officially coming to Cosmos. And, some more details have come out about that. But basically the way it's going to work is it's going to be a consumer chain, which is secured by this thing called interchain security, which goes through the Cosmos hub. And it's not going to be like a Circle chain. It's a generic asset issuance chain. So I guess in theory it could, apply to more than just Circle. But this is a pretty big deal because Cosmos lacks a native stablecoin. It kind of had that in the form of Terra Luna for a little bit, right? And obviously the TVL on Cosmos has gotten wiped as that has failed. But there's a nascent DeFi ecosystem over there, and there's just no native chain. So apparently a big driver of this was actually DYDX migrating to Cosmos. So one of the big reasons that DYDX migrated to Cosmos in the first place is they wanted more control basically over their execution environment. And what they want to be able to do is like not use the native token of like they had to use ETH before. They want to be able to use like a stable coin like USDC. So that was like there was kind of like a push pull there of DYDX's migration and Circle investing with USDC, putting USDC in that ecosystem. So it's expected to launch next year. The reason why this is one interpretation of this is bullish for Atom, the token, because when you mint and redeem USDC stablecoin, when that gets secured through interchain security, so the validators on the hub, 90% of those fees are going to go to stakers and validators. So it's there's a case to be made that it's bullish for Atom, the asset, and that's been the really tough thing to underwrite with Cosmos in general. Is like, why do we really need Atom? So that's kind of the high level. I'd be curious to see what you guys think about this.
The Atom token model is actually well suited if someone is like, let me back up. One of the main use cases of bridging is bridging the large assets, USDC, ETH, et cetera, and if you're thinking about Atom as a value accrual mechanism, just from fees that are going to come from the interchain scheduler, stablecoins are probably going to be what's going to drive that. If you think about it, it logically makes sense. What other assets are people going to be switching from chain to chain in a Cosmos specific context? Probably not very many. And so this is likely the most bullish thing that they could have. I think the missing thing with the USDC business model is like, what are people like? How are people going to accrue value from the actual using of USDC if you're a USDC stakeholder? And having their own chain and being able to pass fees from whatever gas transactions happen on chain to those validators. I assume there will be a token to run this chain at some point, or maybe it'll just be an EOA setup. But if that does happen, that would also be pretty bullish for Circle as a company and be this hybrid on-chain, off-chain business model that not a whole lot of people have pulled off because there is no off-chain corollary to establish, value. So I think it's pretty cool. I certainly wouldn't go charging headlong into Atom, just because there still needs to be, I believe, that proposal voted on and passed that actually sets up all of this stuff, in the vision of the interchain schedule and things like that. But it's pretty interesting.
I have a really dumb question probably. Why? So the consumer chain here pays fees to the hub. why wouldn't Circle want to capture those fees? Why wouldn't Circle just create their own chain here, like a Circle chain?
Because you'd assume that the USDC is going to a chain to be used, not just held on chain on the on the USDC chain. Maybe if USDC ends up building their own applications in DeFi, it lives there. But until proven otherwise, I would assume that all the DeFi apps are actually separate chains in a Cosmos context, at least.
Is there a regulatory reason for this? Is like specific to something like USDC, which is purporting to be something that looks like a dollar, right? Like a crypto dollar. I wonder if there's like, if you suddenly have your own chain of validators that, like, at least for the beginning, right? Like it'd be very difficult to bootstrap a network of totally decentralized validators right from the beginning. So there'd probably be like a small set of permission validators to start that you theoretically control, and you're issuing dollars that people are using. Suddenly that kind of starts to look a lot like a payment network to me. I'm wondering if there's a regulatory component as well for using validators that aren't associated with Circle. I'd be curious to get your guys' take there. But I'm, venturing into territory I don't know.
Depends on how it works. If when you I guess there would need to be some sort of front end that you would create USDC through, or it would be on an exchange that would then send it to that chain on your behalf. But like, it's not like there's going to be a permissionless, like I roll up to the chain, I deposit something on chain and I get USDC back. That would need them to do all the KYC AML. And that's really the crux of it. Like, who does that work? It's either the exchange, it's either a front end that you have on your own website, or it's you if it's done natively on chain. But you need to figure out how to do that in a permissioned way.
I think nothing really changes from like a money services business or money transmitter license perspective here. It'll be the same, which is if you're a centralized provider of user deposits, you have to register as a money services business. If you are decentralized and the users own, their own equivalent of MetaMask or their own, wallet itself, then you aren't, the MetaMask isn't the money services business because it's not user deposits held on behalf of another person. But to Vance's point, there will at least have to be some centralized component here, which is creating or facilitating, I would imagine, deposits of dollars and creation of USDC. So there will have to be some entity at some point, I would imagine. Maybe there's a decentralized variable that goes on top of that, but it would be something that's on top, not really like the core of what it is.
Michael and Vance, let me just ask you more like zooming way out about Cosmos. I know you guys are very long ETH. You like don't, you're interested in the app chain thesis, but like you're not very long on it in general. You don't think you don't buy Atom or anything like that as like a hedge against ETH or like as a call option on the app chain thesis at all? I know not financial advice, like your lawyer, whatever your lawyers want us to say, not financial advice, but like personal or for the fund.
That's exactly
like,
what Adam wants you to say.
No, but like you don't, like I feel like I don't know. There's obviously a lot of stuff happening with Cosmos and the app chain thesis. So like you don't dabble in it at all as like a call option on that space?
Well, let me put it a different way. We're not really in the business of like building a hedged portfolio. Like that's not what a venture portfolio is. We're supposed to be making concentrated high ownership bets in things, that we want to have a distinct perspective on. Maybe more of like a hedge fund would be in the business of like, okay, let's have all, the base layer one assets and, run that playbook. So not specific to any specific assets, but the portfolio construction kind of precludes us from taking that approach.
I also think just on a relative basis, it's not like we don't like it and we don't believe in it and, we're never going to buy it. Just like right now, we think there's better uses of that capital with a more aligned thesis. Like we don't want to be paid to get you a generalized crypto portfolio. That doesn't feel worth it.
Let's talk about liquid staking derivatives a little bit. We've got kind of this coming approach of Shanghai. So the Shanghai hard fork is kind of emerging as new narrative. So that's basically when, among other things, that would basically be the time that you could allow ETH will facilitate withdrawals from staking. So that means that all the revenue that these liquid staking derivative protocols like Lido or Rocket Pool or CBETH or whatever have been accruing, you can finally get utilization there. So in addition to allowing withdrawals, there are arbitrage opportunities, and there's better price parity and trading volume for LSDs themselves, right? So there's been a big rally in Lido, Rocket Pool, etc. So I'd be curious to, there's also kind of this big question of like, is this kind of a sell the news type? Is this going to negatively impact ETH price somehow because staking withdrawals are finally enabled? So I guess I'd be curious to get your thoughts on just that point to start off with, and then like what does this mean for the the LSD sort of ecosystem?
Real quick, what's the timeline that we're working on here? Like, when is this actually happening?
So Shanghai is targeted to be March, and that is a target that Ethereum core devs have made. Does not mean that it's happening in March. The other thing I'd say is that there is a withdrawal period based on how much is desired to withdraw at a given point in time, and there will be a queue. That depending on how much is being withdrawn, that queue could be days to weeks to months. But generally, let me maybe go back and ask you guys a question. With Shanghai, let's say it happens by the end of March. By the end of April and then June, so 1 month and then 3 months out, where do you think, and let's say that there's 15 million ETH being staked right now, where do you think ETH staking amount will be at the end of 1 month and the end of 3 months? Higher or lower? Because I can see arguments for both. I can see arguments for both, but
I'm not sure I can even make an educated guess on it.
Won't staking just my really super left bell curve argument is that staking just continues in 2023, and like more and more people end up staking because you can earn yield. So that's my super left bell curve take.
Sure. So that's part of it, but I assuming that withdrawals are enabled in March, and then in April, and then in June, you have the ability to actually withdraw those assets. One argument would be, okay, there's been there's give or take about 10 million ETH that is being staked that's not represented with a liquid staking derivative right now out of the 15. So those people who've been staking those assets don't have liquidity and haven't had liquidity potentially for years at this point. How much of that is going to get withdrawn is kind of one of the questions. The other half of the argument is, now that let's assume that you have withdrawals, that de-risks the liquidity of having staked ETH in a staked ecosystem. So wouldn't that increase the amount of people that want to stake their assets? And it's just really a question as to like how strong are those two different vectors, and which one over the course of 1 month, 3 months, 6 months, whatever, will outpace the other. My guess, and this is 100% a guess, I finger in the air, I think it will actually increase over time. Where now that you have the limiting of the restrictions of or the illiquidity that you have from staking right now, and the de-risking of Shanghai going in, I think eventually that will draw more people in as opposed to allow people to withdraw.
There's also a third bucket of staking is just pretty new as a thing that people do in crypto, and I think we're really early days of like the innovations that happen with staking on ETH. I'm finally digging into EigenLayer, and it's pretty cool. Like providing these like security as a service. I'm still trying to wrap my head around it, to like rollups and bridges and oracles, and like allowing people to use ETH's staked security to like complement the security that's provided by a native token. They're coming on the Empire podcast next week to like really explain what they're doing, but it seems pretty cool, and like it seems like that's a new bucket that's coming in 2023 as well. Like innovations in the staking space, which will increase staking, I think.
I mean, number one app in DeFi, Lido, it's doing 40, 50 million a year in revenue. These things are super levered to the growth of Ethereum specifically, and not surprised to see a lot of activity and interest coalesce around Ethereum native projects that are levered to the story, in the wake of FTX and all these blowups. And yeah, it's pretty early. In our opinion, there's going to be a lot of these things where you have EigenLayer, you have things like Obol, that just basically extend the utility of staked ETH. And I think where this is going to go is eventually people realize that a lot of the value prop of Ethereum itself is the staking community, the validators they run, and the other things that they're able to secure via that a combinatorial slashing system like EigenLayer. So it's probably overdue, frankly. Just in terms of looking at all the PEs of how these things are valued.
Can you guys explain Eigenlayer? Actually, I get what it is at a very high level, but I'd be curious, like, to hear you guys, because I know you want to talk about it like a couple weeks ago, maybe like a month ago at this point.
Eigenlayer is technically an L2. That's how it's actually constructed, where you deposit your staked ETH into a smart contract. And if you want to be visual about it, you deposit it into a smart contract, and then you're taken to what looks like a marketplace, where you're able to say, all right, I have my staked ETH that's earning 4.5-5% per year, but I can go off and use rehypothecated staked ETH to stack my yield and go secure things like middleware, or things like a data availability layer, or things like a settlement layer. And from this, what do? Well, you get all of these pieces of middleware and other scaling solutions that don't need their own native token, that can just use ETH, and the value accrues back to there. But you also get this kind of other scaling solution for Ethereum. If a lot of the properties of what this restaked ETH will be securing are things like data availability and settlement, that's a lot of what actually Ethereum does. And so you have this combinatorial effect of the yield, you have this marketplace of staking opportunities, and you have these new primitives that are produced that are secured by the restaked ETH and the validators that are running it. So that's kind of what Eigenlayer is. And last time we talked to those guys, they said that it would be Q1, Q2 of when it launches. So it's not actually too far off.
Super interesting. It was interesting to see CB so far up there in terms of market share. I mean, it's a relatively new product. They, I think, have over twice the market share of Rocket Pool.
Who will be the largest staking provider by the end of this year? Who's the biggest?
Probably Lido or Coinbase ETH.
I was more saying, do you think
Lido.
it'll be Lido or Coinbase? I assume those are the only two.
Wait. Do you mean staking provider or liquid staking asset?
Liquid staking asset.
I was
thinking
Lido.
CB ETH versus Steth.
Lido has like 4.7 million ETH. Coinbase ETH has 1 million. And
yeah, but Coinbase can just turn on more click of a button inside of an app.
Yeah, but they've already done that.
Keep in mind, the other thing too is that CB ETH is not available for institutional customers, and I would imagine that most of the activity, as we're talking about the de-risking of Shanghai, most of the activity that we'll see for the rest of 2023 is going to come from institutional staking providers. And that's just going to be something that's different from CB ETH.
Coinbase has a solution there too, with Alluvial. So they've got, I forget what it's actually called, but it's like LS something. I forget what it is.
I think LS ETH is exactly what it is.
Okay. So that's some sort of I'm blanking on the word. But there's a combination of different. It's like Coinbase is in there, and Blockdaemon, and a whole bunch of different. It's an interesting project.
It's the institutional approach to liquid staking.
Do you guys have any thoughts on the tech layoffs from the week? So I know we've been talking about this for a period of time, but I have a friend. So like the two big ones I think that announced this week. Amazon cut about 17,000 jobs. Salesforce I think was 11,000 jobs. I have a friend who works at one of these companies. Not one of those two, but like that just did one of these successive round of layoffs. About like a 7% riff or something like that, and they were like, This is one riff. There will be more. They will continuing happening this year. It's like that's a really interesting. That's kind of it, because the wisdom they're supposed to be cut once, so people aren't worried about their jobs. And this company's taking the exact opposite. This is a big, huge company. The exact opposite tack of like, yeah, we just cut 10%. We might do it again. We probably will. So there you go.
It's a really interesting psychological tactic.
Yeah, it is.
Yeah.
Yeah, you think all those people who made those TikTok videos are excited right now?
Dude, I tweeted that today. Like, do you think those product managers are like rethinking some of the videos that they posted? Yeah.
So it's interesting. I mean, these numbers. How many did Salesforce lay off? 7,000?
Thought it was 11. Hold on.
I can't. Listen, not to say that my 2023 prediction is already coming true, but it is. This is step one in a 10-step process to where tech becomes value as opposed to growth.
I was watching the Madoff documentary. I'm watching the Madoff documentary this week. It's on Netflix. It's decent. It's not amazing, but it's decent. But they show these like old CNBC clips from like 2007 and 2008 and 2009, and we think these layoffs are a lot. The numbers back then were staggering. It was like Bank of America to lay off 55,000 people this week. It was like these colossal numbers. So I know I don't know. I'm not saying things are going to get worse or better, but like 7,000 in the grand scheme of things, or 11,000 is still like, 7,000 is still like, 10% of what they were doing, of like what one bank would do.
Someone maybe tweeted this or said this recently, and it hasn't been fact checked by me, but it was something to the effect of like, if you got rid of every single person at every single tech company and just a riff of the entire tech industry, it would increase unemployment rate by like 0.25%. Like these companies are large, and yes, these, thousands or tens of thousands of riffs are also large, but they're not large in the grand scheme of like American employment. And we have to keep that in mind as well. These are going to be, a vocal minority in the grand scheme of things.
They've had it so good for so long. I was talking to my parents about this when I was back in Montana for Christmas, and I was describing like everything that was going on with tech and these layoffs and how it's been very cushy to work in tech for a long time. And both of their memories of tech was that tech like worked you to the bone. Like if you worked in technology, that was supposed to be kind of how I think of finance or consulting or something, now. And their conception of, I was explaining to them, it's like not like that at all. And there's the kombucha stations and all this, everything's like paid for. And yeah, it was just interesting as a generational gap. That was like not their memory or conception of it.
Vance, what you just said, I'll actually take the other side, which is I don't think tech, like the industry and like the mass of the tech workers in San Francisco, is actually ever going to really recover. I think it's going to switch, and you're going to see like the tech industry become this like highly profitable, engine of success. And then it'll be like, okay, well, what do we use our money to go off and do? But it's not going to be like, Apple sits on how many hundreds of billions of dollars of cash. It's not like they're going off and just like hiring hundreds of thousands of people to make up for it. I think they'll use their money in different ways versus like headcount.
The sort of dystopian, just when you look out, I mean, it's been actually, if you look at the real wage growth of different income strata, it's been a pretty interesting picture. Like you often hear inflation is this like super aggressive tax against the poor, where actually like the lowest income earners have grown the most relative to everyone else, inflation adjusted, which is kind of a counter narrative. But it has been, I mean, all you hear from employers, right, is like complaining about I have to pay my workers like XYZ, and you can see it in the wage pricing power as it's sort of growing. So there have been polls to like big companies, right, like to CFOs and CEOs about how are you thinking about responding to wage pressure? And some of them are like, we're going to pay our workers more. That's not a very high one. The highest one is we're going to confront this with automation. And like 84% of respondents said that.
Did you see the McDonald's stuff? It was like the first fully automated McDonald's just came to Arkansas. And
there's people still making the food there. I checked. I did a little fact check.
And, yeah, I know, but like someone from McDonald's, someone high up was like, someone's like, I guess a reporter was like, why are you doing this? They're like, well, because we're like the state is demanding that we go to 15%, $15 minimum wage. So this is how we responded.
Right. There's a lot of things you will do before you do that, if that is the only solution.
Yeah,
I think it's going to be a different type of employer market going forward. I think a lot of people who spent the past 3 or 4 years working in these large tech companies, that may be as good as they ever get it from a work-life balance and pay standpoint. It's going to be interesting to see what happens going forward. Like, we still know people who work at all the large technology companies. They still get paid very well. They still do very little, but it feels like slowly that's going to be chipped away at. And that's validated.
I think it's a multi-year cycle. Yeah, like my friends who still work at Facebook and Instagram, which I guess that's one thing. Like they're not doing much these days. I can assure you of that.
They're chilling.
So it'll take a while for that to work its way out of the system. But I think it's just a cycle too. Like, it'll take a year or two, and then like the market will come back, and then like companies will start hiring again. Maybe it happens in tech, or like maybe it happens in crypto, or maybe it happens somewhere else, and then several more years will go on, and like that industry will make an insane amount of money, and like maybe it's crypto, and maybe in 10 years, like where people say that about crypto workers, like, man, they just sit on their ass, don't do anything, and they all make, you know, $400K a year. Like, maybe, who knows?
I can see it. I think it needs to be something new, whatever the standard bearer is going to be. Like, I saw that OpenAI is raising a $29 billion valuation, certainly a candidate. Crypto recovery, certainly a candidate. But
yeah,
the FANGs are, I think, just going to be different.
Yeah, I agree.
Yeah.
You know,
There's a guy who used to work here. He used to work in like trading, like not quant algo sort of trading, but like more traditional, like you'd think of trading. And he basically said the dynamic there is, you know, he's a little older than we are, and he was like, that was like a job that you really wanted to get coming out of school. And the guy that was kind of his mentor described this dynamic of, he said his income peaked when he was like 32 and has been going downhill ever since. But the problem is like that level from where he started was still so high, and trading such a specific skill, there's like no alternatives. So you just have to like kind of psychologically just watch like year over year. You're still getting paid a lot, but it's like less and less and less and less. And it's just, if you think about going through that, it's a tough, it's a tough thing to go through. But I just thought that was an interesting anecdote.
asset managers, traders, they kind of do one thing well, you know, and there's not a lot of transferability of that skill set. So get it while the getting's good.
That's what I mean. Don't get stuck.
There are kind of also, I don't know if you guys have, there's a lot of, I mean, Jason and I live in New York, so there's a lot of kind of like investment bankers or private equity people or whatever. It's a very specific skill set that doesn't sometimes translate super well to general companies.
Building anything.
Yeah, it's like being in the
things.
It's like being in the military. Same thing. It's like you're really good at that. Like, how does that transfer? Like, you really kind of need to kind of reinvent yourself if you're going to move.
You have the ability to showcase that you have very strong work ethic. You have the ability to present analytical arguments and do analysis in general. Like, there are some transferable skills, and not to say like there are none, but the higher and higher you go up, the more particular they get, and the more particular like the prospects of where you're going to go next for your next job are going to become. So I have a ton of friends that are going through this right now. It's like, do you go up and continue on, or like, you know, ride this place to the best of its abilities, or do you kind of like change things and go in a different, more broad direction? It's going to be a tough predicament over the next couple of years for that question.
I think it's also really tough to transfer industries. So like if you work in PE or something like that, you don't have another skill necessarily. But like if you're like a VP of product management or something, like you can go into another industry and do product management. I think like you could move into crypto, or like you could probably even move into like healthcare and do like product management for like their tech platform they're building, or you could go become an investor. But like it's very hard to go the other way.
You could be like you can go to like finance, be like a VP of finance at a startup or something like that. Like I've seen that.
Yeah, but then
happen.
you have to take a huge pay cut.
You do. Yeah, you do.
Which is hard to wrap your head around. Yeah.
Whatever you do, you just need to be the best at it. If you're the best at what you do, like, there's always going to be a role for you. But middle 80%, it's going to be tough.
Advice to live by.
Words.
If you're going to do something, you just got to be the absolute best.
Be the best.
Seriously.
Vance, I heard you're horrible at skiing though, so what's the deal with that?
Bro, I'm nasty. Come with me. Seriously. Fuck around and find out. I'll take you in the backcountry. I'll just leave you there.
Fuck around and find out.
That sounds appealing. Yeah, definitely going to go now.
Oh yeah,
sure.
great. Sounds like an ideal weekend. I'll be there soon.
Yeah. Catch the next
I'll
one
leave
out.
cameras around the area where I leave you just to get the reaction.
We're taking a dark turn here, so I think this is a pretty good time to call it. So, all right, fellas, this has been a fun one to start the year. See you here same time next week.